What are some of your questions when people say get out of debt? What comes to your mind? So for those listening, debt is a four-letter word for most people. There are many people in my position, so-called financial gurus, who say live totally debt-free. And there's other people who say cut up your credit cards.
Have you ever imagined what it would be like to have an excellent credit rating? The sort that allows you to access cheap interest rates, mortgage approvals, interest loans, and even gains that exceed your wildest expectations. Start with the fundamentals by explaining what a credit score is. It's a three-digit number that represents the creditworthiness, to put it simply. Your financial situation is represented numerically, and it has a significant impact on how you live. Your payment history, credit utilization, length of credit history, credit mix, and most recent credit queries are just a few of the variables that go into calculating your credit score. The real kicker is that these elements are not all created equal. Some significantly affect your score more than others. The holy grail of credit development is mastering the art of payment history, paying your bills on time every single time. This one characteristic accounts for a staggering 35% of your credit score. Be careful and fulfill your financial commitments because missing even one payment can have a severe impact on your credit score. Taming the credit utilization beast. Your credit score depends on your credit utilization, which is the ratio of your credit card balance to your credit limits. You can show lenders that you are a responsible borrower by maintaining your utilization below 30%. Uncovering the power of credit history length. Did you know that 15% of your credit score is based on the duration of your credit history? Keep your old credit accounts open, since the longer your credit history, the more reliable you seem to creditors. They're like untapped gold mines just waiting to be found. The magic of the credit mix. Having a variety of credit types, including loans, mortgages, and credit cards, may do wonders for your credit score. Lenders like learning that you can manage a variety of financial obligations, but keep in mind that moderation is essential. Avoid creating too many accounts. Understanding recent credit inquiries. Every time you seek credit, a mark is left on your credit report. Lenders may be suspicious if they get several queries in such a short period of time, possibly signaling financial instability. Therefore, use caution when looking for new credit options. Congratulations, you now have the information necessary to win the game of credit scores. But keep in mind that this path is a lifetime commitment. It doesn't finish here. Monitor your credit reports on a regular basis. Be watchful and check your credit reports frequently. Watch out for mistakes, shady behavior, or identity theft. Your credit score will remain in excellent condition if you identify and address problems as soon as they arise. Use credit cards wisely and make sure to keep them far below your credit limitations to maximize your utilization. Pay off all your debts each month and keep an eye on your spending. Your credit utilization will be kept under control, and your credit score will remain healthy with this methodical technique. Applications for credit should be deliberate. Do not be impulsive. Only apply for new credit when it is really required, and think twice before it affects your credit score. Always be choosy and only apply for credit when it is truly essential. Become an authorized user. Ask a family member or trustworthy friend with a good credit history to add you as an authorized user on their credit card. Their good credit practice will raise your credit score significantly by reflecting on your credit record. Keep old accounts open. Recall those previous old credit accounts we mentioned. Do not shut them off. Keeping them open demonstrates to creditors that you have a history with credit, which raises your rating over time. The temptation to sign up for every retail credit card providing discounts may be strong, but you should exercise caution. Your credit score might be lowered if you submit several credit applications quickly. Only apply for credit when absolutely required, and be judicious. Getting the ideal credit score is a process that takes time. Although it involves patience and perseverance, the benefits are worthwhile. Even if you previously committed credit blunders, keep in mind that time is on your side. Time cures all wounds. As time goes on, negative information eventually loses its influence on your credit score. Keep up your commitment to maintaining good credit, and your prior transgressions will become insignificant. Be proactive. Don't wait around for a miraculous rise in your credit score. Take active measures to keep an eye on your credit, pay your bills on time, and uphold sound credit practices. You'll make progress more quickly if you're more proactive. Seek expert guidance. Don't be afraid to do so if you feel overwhelmed or have trouble navigating your credit score game. Financial and credit counselors can offer professional guidance catered to your unique circumstance, assisting you in making decisions for a better credit future. Your credit score will not suffer if you check it. It's not harmful to check your personal credit report or score. Despite what many people think, it's known as a soft inquiry and won't affect your grade. Therefore, do not hesitate to routinely check your credit without any concerns. Your score rises when credit cards are closed. Closing credit cards, especially if they have a lengthy credit history, may actually lower your credit score. Your overall credit limit is decreased, and your credit utilization ratio is impacted. It's not absolutely required. Think twice before canceling credit accounts. A better score equates to more revenue. Your credit score is based more on your credit history and financial behavior than your income. While a larger salary can aid in debt management, it has no immediate effect on your credit rating. Keep in mind that it's about managing your credit responsibly, not your income. Remember that self-confidence is essential. No matter where you are in your credit score journey, have faith in your abilities to build a strong credit history and attain financial success. Although perseverance and determination may be needed, you are more than capable of achieving your goals. Your credit score is more than simply a numerical value. It's a symbol of your fiscal discipline and a gateway to opportunity. The secret to obtaining and keeping a flawless credit score is consistency. Make excellent credit habits a part of your everyday routine, and keep in mind that even the smallest acts carried out repeatedly may have amazing effects. You have the power to control your financial future if you have the necessary information, perseverance, and self-confidence. Accept the road, maintain your resolve, and let your flawless credit score serve as a bright example of your ability to succeed financially. Finally, have confidence in your potential to succeed financially. You have the ability to sculpt your credit future and build an abundant existence. Maintain your concentration, have faith in your path, and let your flawless credit score serve as evidence of your tenacity and fortitude. According to 2019 Experian research, 1.2 of all Americans with credit have a FICO score of 850.2. Regularly making on-time payments, having a low credit utilization ratio, and maintaining a lengthy history of credit accounts are all necessary for a flawless score. A perfect score often requires years of such exceptional financial behavior. Your credit score may be raised by having a diverse mix of credit with minimally harsh credit checks. But maintaining a flawless credit score might be just as challenging as obtaining one. For instance, if you fully pay off a loan, which is a commendable financial decision that might free up your funds for saving and other purchases, you'll reduce your credit mix, which can lower your score by as much as 15 points. Remember that your credit score is a snapshot of your credit history at any particular time and will inevitably vary even if you maintain a diverse mix of credit for the extended length of time. Although having a credit score of 850 is ideal, experts advise that good to exceptional credit is usually sufficient to increase your chances of being accepted for credit cards, loans, and mortgages with more favorable interest rates and loan terms. And achieving it is much simpler. In actuality, 58% of Americans already have a FICO score of 703 or better, which falls squarely in the center of the good category. However, there's a catch. The higher your credit score, the greater your chances are of locking in reduced interest rates. In general, lenders do not differentiate between scores of 800 and 850. Some experts even go so far as to say that FICO scores higher than 760 might not offer any further advantages, meaning a score in the upper 700s would, in many circumstances, be equal to flawless. For instance, according to FICO's loan savings calculator, a score of 760 might get you the same low interest rate on a loan as an 850. Remember, it's about more than just your credit score. It's about opening up a world of chances, taking advantage of them, and living the life you've always wanted. Before you leave, don't forget to subscribe to our channel and whack that like button if you loved our content.